here's a question that I hear a lot. Which returns can you expect if you invest in venture capital? And the answer is complicated because the returns vary over time, because some funds do well, other funds don't. But overall, the venture capital sector is a sector which has had a very high performance in the US, somewhat lower in Europe. But it's a sector that tends to outperform listed equities, for instance. But it's also a sector where you need to diversify a lot because there are lots of casualties. It's like navigating through a minefield. How can you go wrong when you do venture investments if you run a fund? One thing is not to invest in the winners. There is a website that I encourage everybody to visit. It's from Bessemer Ventures, and they have something they call their anti-portfolio. So the anti-portfolio is a list of investments that they were offered and they didn't do. And it is hilarious. It is so funny. For instance, they went to see the house where the founders of Google were sitting in the garage. And they thought that starting a new search engine was a stupid thing. And when they had to leave, they asked if there was a way to get out of the house without going into the garage. So that's how they avoided investing in Google at the time where they could have made so much money. They did the same with one super winner after the other. And yet, Bessemer Ventures has been a great fund because they have made many other great investments. So life as a venture investor has that. Sometimes you do miss some great opportunities. Another thing, though, that is more common is you invest in something that doesn't work well. And there are statistics that show how many failures there are. There was one study from Harvard University of a lot of venture capital funds where they looked at how many percent of the companies they invested in did not provide a good return, so did not provide a profit for them. So that might have been break even, or it might have been a loss, in some cases a total loss. So what do you think it is? So these companies, they sit there, they look at tons of proposals, pitch deck after pitch deck, meeting after meeting, and then they select the very best. And then it turns out 75% of the ones they selected did not generate a profit for them. So that shows that there are lots of failures in this industry, which is a reason you have to diversify. There was another study done of German internet and e-commerce companies. It was 4,841 companies. Turns out that 21% failed. 21% is not that bad, I think. But here it comes. When you look at the ones among these companies, which was more than 500 who received venture capital funding, 53% failed. So how does that work? And the reason is this: venture investors, they are looking for Formula One companies. They are looking for the ones that drive really hard, that can go really fast. So it's like you are standing there at a road and you are selecting the most promising cars. And then you say, okay, come here. I'd like to invest in you, okay? So now I invest in you. You know what I want you to do now? I want you to drive 5 times as fast as you did before. I have to drive 5 times as fast. So they go like crazy. After they get this funding, they accelerate. They go so fast. So some of them get really far and they become very profitable investments. But of course, it also means that a lot of them crash. So that's a part of the game. If you look at all the different studies, and I've done this many times, it's very difficult to get to an exact number because they're measured in different ways. But the overall impression you get is that if you take lifestyle startups like a flower shop, a dental clinic, a restaurant, and you look at the survival rate after 3 years, about 75% survive 3 years. But if you look at growth startups, within 3 years, only 25% survive. So it is a tough area to be in. It's a tough area to invest in. But nevertheless, because you invest in many and because some of the ones who make it really big, it is an asset class which overall is very profitable for the investors. So the overall message is this. There are lots of failures and lots of misses in venture capital. but there are also some that go very well. And if you take the overall long-term return from investing in venture capital, it is a very good asset class on the condition that you diversify and you stay with it over time.
Do you speak future?